Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Friday, everyone. All right, so we have a kind of an interesting reaction this morning. Just going to take an early look at some key markets. Let's do this here real quick. Taking a look at the S&P, a little bit of a bounce, a little bit of a minor low break. Look, any bounce I am going to welcome, not because I'm bullish, but because this is time to consider shorting the rip, right? And until we get to levels that are actionable, I'm going to continue to focus on short-term time frame setups. And, one of the things that I showed you all in the free video yesterday, I really, in that video, I sort of featured an indicator, but also more importantly, sort of a philosophy around how we are as traders understanding price action. Almost all of us will look at price through open, high, low, close, candlesticks, candlestick patterns, trend lines, support, resistance, and then a collection, a curated group of indicators that are all also looking at open, high, low, close. So many of you know I also look at volume, the sub-market sonar of the market. That is not necessarily volume by, let me grab my drawing tools here. Where are they? Here we go. Not necessarily volume by way of time of day, although that's, depending on what you're doing and clearing ranges and things like that, that might be mildly pertinent for when the market is waking up. That's what time-based volume is very different than price-based volume. Time-based volume is akin to an alarm or a dinner bell. When are traders coming in and out of the market? It's the when of it. But the what, and even in many ways the why, is going to be the volume based on price. How many trades happened at a certain price? What's the point of control? What's value area high, value area low? VWAP, that's price-based volume. So if you're looking at price and volume, you are already a huge leap in front of typical traders on any time frame. Now, when you start to add to price and volume, time and volatility, those are the four factors. And that's what I got into in the free video yesterday. How do we use time and volatility, historical volatility and time of day to find yet another series of levels to keep an eye on, right? How do we find those levels to keep an eye on? So as I'm dissecting the market, end of day, I'm also thinking until we get to levels on the daily time frame that we're interested in, let's keep the time frame that we're trading nimble. Let's be able to get in and get out of the market until we make that significant move and we can follow some of the more interesting established trends. Case in point, a lot of you know, if you're in the futures room, if you're in the Sector Secrets Mastery, we have that first opportunity at the wave, and we're already getting follow through, which is fantastic. I love when we get in on, say, a Thursday, and then on a Friday, we're already seeing confirmation. That is not always the way. Many of you know that is not always the way of the market, but I'm really liking what we're seeing on ZN here this morning. Continuation of the overall downtrend. And so that's the way in which we're going to navigate the market. Nimble when there's nothing to do longer term, waiting patiently until those longer term timeframes finally reach that zone where we know it's time to take, a whack at that pitch, right? Wait for that zone. All right. So as always, gang, this show is about your questions. And I thank you for showing up with your questions, with your enthusiasm, Monday through Friday. We also have a show on Sundays, 6 p.m. as the markets open that accompany the notes that I send out to you all. So I send out the weekly notes, the report, if you will. We take a look at this week in the market together, both in the notes and then in the show on Sunday right here at the Simpler Trading YouTube channel. All right, so let's get into our very first question of the morning and kicking it off with Delta. All right, what do we have here? Good morning, What look back period do I suggest for the volume profile? Awesome question. Uh, I suggest two main look backs. And you know what? Let's go to the trading view charts for this. So I look at two main look backs. All right, the two main ones that I look at are, so this is what? This is ZB. Okay, cool. The current year that we're in. So January 1. And then today is Friday, May 13. Any trick-dectophobics out there? I'm not necessarily superstitious. As my sister likes to say sometimes, I walk under black cats all the time. So here we are, also looking back 1 year. So first of the year and then 12 months back. And those are the two look backs, Delta, that I will look at, not only for volume, which is the volume profile is what you're seeing along the right edge of this chart, but I'll also look at those anchors for the VWAP. I do not believe in a rolling VWAP. I believe in an anchored VWAP. So the amount of data on our screen dictates our opinion of where we are. So really important question. Love it. Love it. Jose, thank you very much. I am every morning, when I look at the questions in the group, and we have, sometimes 500 plus people here live. Yeah, I'm always tickled pink, and I'm grateful, and I'm inspired because there's so many of you spending the time, putting in the work, and that inspires me. Right? All right, see traders, our community putting in the time and work. I was just talking to my husband about, I haven't traveled in a while, and I was saying it's so interesting that trading has taken me quite literally around the world, anywhere from Jamaica to Toronto to London to Seoul. It's Paris, you name it. It's taken me around the world, and wherever you go, it's amazing. There is a community of traders. There are people like us who just can't get enough of the market. So I appreciate that, Jose. All right, Giancarlos, can we watch the energy sector? I think it's going to turn to the upside next week. I love to trade with XOM and XLE. Well, it's always good to have a hunch, right? Always good to think about where a market could be going, right? There's no doubt about that. There's a couple ways we could look at the energy sector. We could look, well, first of all, keep an eye on RB and NG. Then we're going to transition to XLE, OIH, XOP, FCG. So wait for those setups, wait for those trends and pullbacks. MPC is absolutely on my radar. WMB, all my cards on the table. That's an open trade for me, and seems to be kind of finding its way back to gaining some traction. But so much of this, Giancarlos, is going to be predicated on two commodity symbols, natty gas and RBOB gasoline, because there are corners of the market in energy which are still heading higher. Crude is not. It's chopping with a previous uptrend. So this is choppy, bullish action. So make sure you're emphasizing those stocks, as you mentioned there, that are going to benefit from RBOB and natty gas, and you should be in really good shape. All right, Alan asks, good morning. There's a 500, hang on, there we go. Trying to get all this noise off the chart here. There we go. Let's see, there's a 500-ish FXY, 73 puts. My only problem with playing FXY, really, or FXA, FXC, FXB, one of the hesitations I have right now is making sure I'm still covered in FXE, right, which looks great. That's more US dollar strength. FXY is tricky because if we see equity markets weaken, that will strengthen FXY to a degree. So just be careful of in a weakening equities environment that if you short the yen against the dollar should work. It should work because a dollar, even in a strengthening yen, potentially strengthening yen environment, the dollar should be able to outpace the Japanese yen. So my only hesitation with FXY is the weakness we're seeing in equities, which is why I'll probably look at FXA, FXC, E with a little bit of preferential treatment. But yeah, I like the potential for that trend follow. Yeah, I like that very much. What else? Hey there, Warwick. I love your given name. Rick, Warwick, my friend. Absolutely. You mentioned something about the illiquidity, and I don't know if I misunderstood the question. So I'll go back, and if you want to reply to my reply, go for it, because I don't think you'll have a problem with liquidity in QQQ, NQ, or or micro. If you do, take a snapshot of it. At some point, describe to me what it is you're seeing, because I think you should be fine with liquidity, my friend. And if you're seeing illiquidity, check the open interest, check the contract. But generally speaking, that whole choose your own adventure within the NASDAQ, NQ futures, micro, MNQ futures, or the QQQ, those should be really liquid. Those should be really no problem liquidity. But yes, of course, my pleasure. And I do go back and check the questions that are posted below the video after we finish our live. I try to get through all the live questions. If I don't get through if I don't get to your question, gang, in our show, feel free, to copy and paste it after the show ends, and I'll see it in the comments, and I'm happy to, do what I can to get you an answer there. All right, next up, let's see here. Student, I find many double green setups appear overextended, yet when they pull back, they turn yellow or neutral and no longer double green. And that is not a problem. That is fine, because as long as you're moving with the broader trend, your probability that even if the trend goes neutral, we're going to see a continuation is far higher, and that's not unusual. Blue grab candles, etc. Hey there, Deborah. All right, how you doing, Debbie? SU. Ex-dividend date's coming up. Got earnings in the rear view mirror. Tempting. I don't like that drop, but we know what that drop was from, because that was at 21st, 20 through 25th rollover in energies and so forth. So I do like that. I do like that for a buy the dip. That would be fine. I do like that for a buy the dip. Very interesting level, and pretty good trend as far as I'm concerned. ES. So thanks for the question on SU. All right, ES, would 4,000 be new resistance? Any of the major psychological levels would. 3,900, 4,000, 4,100, 4,200, 4,300. You get the gist, right? What I'll try to do is be a little bit more specific. Are we seeing some volume? Around 40.15, 8 propulsion sitting at 40.25. So in that area, Michael, I agree. In that area, I agree. What do I think about shorting TLT? I'm in IEF short ZN futures, long IEF puts. So I'm with you. Just instead of the bonds, we went with the notes. So Diane, the simple answer is yes. Yeah. Is it too early to start thinking about Goog and Amazon splits and how to position for them? Ajax, I don't know, because I don't do that. The only trade around the splits is sort of the MOMO, and I would even go so far as to say sort of the FOMO MOMO, and that goes into the anticipation of the split. But post split, it's nothing for a stock to drop about 10%. So I don't trade that. I know it's going to be a catalyst for potential movement, obviously, but right now I don't see it playing out at the moment. There might be some folks that scramble in before the split, which is just a funny thing that happens in retail investing. But after the split, don't be surprised to see about a 10% pullback. So I don't use splits as a catalyst for anything. If it happens to be a potential bullish event, which I think I agree with you, could be, I still need a setup. So that's more like the backdrop, and then what's the setup that would crystallize the idea with an entry and an exit and a setup and so forth. All right, can we take a look? Thanks for the question, Ajax. I'm sure a lot of folks are thinking about that. VTNR. Heading higher. I mean, there's not much else. There's not much else to say. I like the trend. Really nice trend. So Martha, good eye. But the date specifically that I get to work, this is what I teach the Sector Secrets Mastery folks to do. Pull back on the 9th, the 25th of April, the 5th of April, the 6th of April. Those are the windows that I teach traders to focus on. All right. But good looking trend. I mean, I will definitely put this on the radar. It's under $20. So volume is going to be really important, more so than any, stock over 20 has a different nature. Under 20 volume is really important, but good looking trend. Neil asks, what indicator do I use for volume profile in TradingView? I use volume profile. I use the volume profile. It's built into TradingView. I believe, though, you might have to be a subscriber, even at the lowest, any of the levels, but it's got to be a paid subscriber, I think, to access this, which I have happily been for about 8 years. It's visible range volume profile. That's what I use. That's what I use. All right. Dustin, good morning. What traits are you looking for in a stock for which we'll use the more nimble time frame if these are different from our usual trend following swing trades? Great question. So when we are looking at day trading a stock or ETF versus end of day trading, probably the first thing, Dustin, I look at is the liquidity, right? I want liquidity, Dustin. So that's number one. Number two is I never want to, and this is such a great question, Dustin. I never want to stray too far from the very thing we talk about in this room and on Sunday and in my Sector Secrets Mastery, actually in any room that I'm in here at Simpler, which is how closely related, correlated, in sync is that stock with the broader averages. So I don't want to go off trading stocks that have no sort of stickiness to the movement we're seeing in the indices. So I'm going to start looking at oftentimes ETFs that are heavily weighted within the indices, and then stocks heavily weighted within the indices, and stocks heavily weighted within those ETFs. So that's what I'm looking for. And that's a big net that I just had you all cast, but it's still very specific. And so those are where I'm looking. Is it different from the usual trend following swing trades? Dustin, what I always try to emphasize is a universal and robust approach. So the simple answer is not really. Now, on the 16th, I believe it's the 16th. Yes. On the 16th, we are putting together, we're going to be doing a webinar on the 16th and I think the 22nd or 23rd. And I'm going to talk about the 4 factors of day trading, what I'm going to be doing through summer, what I'm doing with this downtrend and uncertainty to shorten the time frames and still find opportunity while protecting myself from what has been, in some cases, just absolutely bonkers price action. And that is time and volatility, as we talked about before, price and volume. So yeah, it's going to be very similar. So yeah, mark that on your calendar. The first webinar is June 16, and we'll be getting together, and I'll be showing you all examples of how I'm trading and how I have been trading in terms of the shorter term 2 or even 5 minute, which is my preference, day trading. So great question. And Dustin, the simple answer is it's very similar. It's very similar. Do I have, what are my thoughts? Do I have any thoughts on Honeywell and 3M? Honeywell, I will pass. HON, MMM. MMM is probably easier to fade off, say 152 to 154, probably a fade short. But Robert, what I'm going to try to find, so think about where Honeywell and 3M are. This relates back to Dustin's question too. Think about where they are within our universe of stocks. How are they grouped up? How is Wall Street curated a group for us? How has Wall Street shown us, who's moving with who? And that brings us to XLI. Now, within XLI, Robert, XLI is in a beautiful downtrend. UNP, UPS, GE, Boeing, while CAT and Triple M are likely to continue going lower. Take a look at Deere. Take a look at Raytheon. I want to focus in. Even CSX is probably on the way to establishing a red. So if the tide is at a really gorgeous looking downtrend, which it is, so good eye for the corner of the market that's established a downtrend. We want individual boats that are in sync with the tide, because that's where the follow through is going to be the best. All right. So good stuff, Robert. All right. Next question. Let's stick with these. Let's stick with these multi charts, and they are the absolute best way to find relative performance. You want to know who might be leading the pack, who's lagging the pack, who's in sync with the pack. This is the way you want to do it. And if you're a member, by the way, of any really of the main rooms at Simpler, including my mastery, the individual tools that you need, the grab candles, the wave, and the trade flags are available for you to download. And in that way, you can build the layout yourself, right? You can build this layout yourself. And what's cool about this is it's just a flexi grid on Thinkorswim. So you can lay it out however you want to do it. If you don't want something quite so chart intensive, no problem. You can build maybe a smaller multi-chart, but put the trade flags, grab and wave, and you've got a powerhouse of a relative outperformance tool. Gratis, my friends, really important. So great question. So kind of moving to Gary's question with XLV, same idea. XLV, I thought I grabbed XLV, grabbed XLP. There we go. XLV is Pfizer. I would stick with Abbott or Danaher. Do you see that, Gary? Do you see why? I would stick with actually XLV, the Tide, and then, and cool question, great question, Abbott, Danaher. There's actually buys in this corner of the market too, Merck. And so what a mixed up world we have within healthcare, but BMY and Merck are moving against the tide. Danaher and Abbott right in sync with it, right? Probably not too far from seeing TMO, from seeing UNH follow suit. So keep an eye on that. Where are those leaders to the up and downside, relative performance? All right. Last question here. Hey there, Terry. Do I use the put call ratio? I do not. I am not a fan of most market internals. I know that sounds like heresy, and I'm not saying no, for any random reason. The reason I do not use market internals is they are incorrectly weighted. They are not actually reflecting the way in which the indices are composed. What do I mean by that? If I gave you a cookie recipe, right, it'd be eggs and salt and flour and sugar and vanilla, etc., right? If I didn't give you the specific amounts, there's a little pinch of salt, whatever, that's in the cookie, right? If I didn't give you the specific amounts and you just did equal amounts of all those ingredients, you'd have this inedible little baked disc, right? It'd be disgusting. That's what most market internals are. They are not weighted. They are not the specific amount you need to understand what's actually going on in the market. And the reason for that is S&P, Dow, NASDAQ, and most of the heavily weighted sectors within those indices are high concentration weighted. A very small number of stocks, sometimes less than 6, usually less than 10 or 12, are the reason the broader averages move, because of the disproportionate weighting they have in that index and in that sector. Well, market internals usually are the cookie recipe where all the ingredients are of the same amount. So it's really not a true reflection, in my opinion, of what's happening at the market. I used to use tick and arms index, trend. I used to use things like that, but now my market internals are more. And I do look at the VIX a little bit, but there's a futures contract associated with it, and there's some assistance with where we are from a volatility standpoint. That's one of my 4 factors. Makes sense to look at, but it still has the same flaw. So what I look at is flow. I look at flows. I look at high concentration weighted stocks, and I look at currencies. Currencies are the largest market on the planet, and oftentimes currencies will tell you what kind of mood money is in. So I don't not believe in internals. I just don't use the internals that most people use, because I believe that high concentration weighting has changed the way the markets behave, and I want my market internals to reflect that. Now, at some point, I'm going to build market internals that reflect that, but it's kind of a pain in the neck right now. And I don't have the time, but eventually I will. Would I like a weighted tick or a weighted trend, right? A weighted put call. That would make sense. And that's when I would say, yeah, that's when I'll. So I hope that makes sense. There are folks out there that just poo-poo things that are popular because it just seems to sound interesting. I'm always going to tell you why. And if you're curious, Rod, would so many other people use it? That's cool. That's fine, right? It just doesn't fall in line with what I teach. And I think the consistency with and the transparency of what I do has to be at the best level that I am capable of explaining. Otherwise, you don't know why, and you're flying blind, and you can't, right? So I hope that helps. It's a good note to end on. And have a wonderful Friday. And also, I'll see you on Sunday, all right, 6 p.m. And in the meanwhile, gang, keep an eye on that calendar. Keep an eye on the way in which the markets are seemingly in a fairly decent mood to kick off the morning. Be aware of the potential for gaps and focus on those trends, gang. They are there. There's more downtrends than there have been a long time. A trend is a trend. Just take advantage of it, find them, be patient, and those trades will come to you. You got to wait for the trades to come to you, though. In the meanwhile, as always, leave a comment below. Let me know what questions, what feedback you have. Smash that like button, and I will see you all Sunday. All right? Be good to each other.